Hi, I'm Alex Manson, run SC Ventures. Come with me, I'll show you what we do. Hi, I'm Alex Manson and I run SC Ventures. At SC Ventures, we set out to rewire the DNA in banking. There's an element of technology, and the way we want to transform our banking, the whole industry, is a combination of working inside and outside. We engage with partners, with fintechs, we do proofs of concept, we do all these things as you would expect an innovation lab to. But we also build ventures outside the bank, and we build partnerships with people outside the bank, blurring a little bit the distinction between what's in and outside. The ventures to date are 31 varying stages in development, some larger ones that are scaling as we speak, some very nascent ones where people are trying a prototype to see if it's going to work. And we have some 20 odd portfolio companies who are all great partners that we are working with, be it in the bank or be it in the ventures that we're building. Well, first, not all bank-sponsored or corporate-sponsored venture capital businesses are the same. Some of them are very strategic. Some of them are set up to really be financially driven, and sort of everything in the middle. I would say most are about investing in other businesses, and few of them, very few of them, are actually building businesses or ventures. Our conviction going in was that taken on its own, either one of these things would fail. Just having a lab within a corporate doesn't typically transform the corporate for a variety of reasons. It's small, it's on the side, it's typically not empowered, and at some point, things lose momentum. Just investing in fintechs also doesn't move the dial. It could be really interesting. It could be very rewarding financially, but it will not transform the bank, let alone banking. And just building ventures could also take quite some time. It's small, it's really hard, and there's a question mark as to whether this works. The bet we're making, and in that sense we're different from most corporate venture labs, is that the combination of these things has a much greater transformational impact than any of them on their own. And that's because of the flows between everyone, flows of people, flows of idea, to some extent flow of capital, and these reinforcing flows are very powerful. So in that sense, it's a little different from most venture capital or corporate venture capital setups. As a corporate, obviously, we have an objective. The objective is the objective from the shareholder. As far as we're concerned, it's about transformational impact. We want to change our industry. We want to make sure that we're relevant to clients for decades to come. We want to reconcile the expectations of society with banking and financial services. That's very specific to us, and that wouldn't typically be on the agenda of a pure venture capital firm, obviously. Getting to the point where we are confusedly competing, partnering, cooperating with the same people sometimes, and sometimes in different markets or in the same market. And that is a relationship which is a little more ambiguous, and we have to be comfortable with. When you talk about fintechs competing with the banks, I think you have to differentiate between fintechs and fintechs. Some of them are clearly out to sort of take the bank's business and replace banking in a different form. And that's okay. It's an impetus for change, and I'm up for the challenge, obviously, but it's an element of accepting that it's straight competition. Some of them are really positioning them at the other extreme as vendors to the bank, enablers to the bank, and we've had a great relationship with some of them for some time. And then this in between, right? A platform. Are banks competing against platforms? Are banks going to become platforms? But we're seeing the emergence of other business models, which we as an industry also need to experiment with and get comfortable with. KPIs of the team are very strict, meaning we have a set of OKRs, as we call them, KPIs, and we look at them all the time, update them quarterly, and in many ways, everyone in SC Ventures lives and dies by our OKRs. It's a mix of financial targets or operating constraints. We take VC type risks, so we expect VC type returns, as well as transformational objectives, and that can be quantified in terms of the type and number of projects implemented within the bank. It can be quantified in terms of the number of ventures we'll launch, the emergence of new business models, etc., etc. Ultimately, every OKR has to converge to, is it or is it not contributing to rewiring the DNA in banking? If it's not, then we shouldn't do it. I think the main word is diversity. And diversity goes without saying in a lot of environments, and most people mean gender diversity, but I also mean diversity of backgrounds. When you assemble bankers and entrepreneurs in the same room, it sounds cool. In reality, it's really hard because these individuals don't really like each other, and meaning they don't really want to work together. And part of the magic happens when we end up with former bankers, former entrepreneurs, technologists, designers, a variety of backgrounds and skills coming together in the context of SC Ventures, but also in the context of ventures. The successful ventures, almost invariably, as we observe it now, are the ones who are mastering that diversity, and the ones that struggle more are the ones that are more monocultural and have forgot to ensure that they get this diversity of perspectives and views and to some extent dissent within their own organization to move them forward. So diverse is really the world. Future of finance. We all love a crystal ball type question, right? First, it'll be seamlessly integrated. And what I mean by this is an integration between finance and real life, integrating finance into our lifestyles and the things we do. I think it is also a seamless integration between on and offline, the real world and being online. And I think it is increasingly going to be about integrating seamlessly the virtual world and the physical world as we think about the metaverse and other developments. So I am not necessarily predicting that everything will happen in the virtual world. I'm predicting, though, that we will be going back and forth between these dimensions, and that it will be increasingly seamless in the sense that we won't even notice. In order for this to happen, this is important for finance. Data, and starting with identity, is going to be absolutely critical. Mastering people's identity is, whoever masters this is in a pretty good position to master finance going forward. The way we transact will be very different. The way we interact with each other will be very different, and finance is going to be part of that. But the mastering of people's identity is going to be a critical one. Notoriously, we forgot to include money in Web 2.0. I don't believe that we will forget about money in Web 3.0. So it will, one way or another, become very central to the way we operate. And in that context, I think banks, today's financial institutions have a very important role to play, because there is an infrastructure required to run with digital assets, to keep value, to safeguard them, to settle them, to transact in them. There is somebody is going to be building a robust and safe framework to do all these things. And financial institutions who know what it means to operate in a regulated environment and have that trust from people are actually really well positioned to build bank-grade, institutional-grade custodians of data and get on with the environment that I'm trying to predict in the context of finance of the future. Again, interest rates going up. There's time value of money. And that is a very significant change in financial markets, because for the last number of years, generally speaking, interest rates were going down very low, and so deferring benefit was acceptable, and that may not be the case for the next few years. So I think the implication from an investment perspective is that the investor community is revisiting a number of the business models, and people will be focused a lot earlier on product market fit and scaling in a profitable way and in a sustainable way. I think this is having very real consequences on the startup scene, and we're just at the beginning of sort of distinguishing between models that will survive and thrive in the next decades from ones that will be discarded by the markets and investor community. Partly on the back of what you could call a bit of a fintech winter, but also it's obviously clearly driven by financial markets and the constraints that people have when putting money to work. So in the context of SC Ventures, we always said that we needed every single one of our ventures to be commercially viable on its own. They're not strategic pet projects of the bank. They are companies that have to prove themselves commercially with clients and ultimately financially in markets. What that implies is that the ventures individually, as nimble as they can be, as agile as we're trying to make them, will need to adapt to the environment. I like to think that all of them from the get-go, from the start, were set up with an intent to be profitable, to be commercially viable, and certainly not burn cash forever without a return on it. And they will essentially need to demonstrate this in the market. So we're definitely providing a platform where ventures on the platform have the ability to evolve, adapt. One way or another, they need to be commercially viable and proven.